who holds the U.S. Treasury securities? We all want to know. There's 35.3 trillion in Treasury debt, going up every 100 days, $1 trillion. Who holds this stuff? Like, I know I probably do in my money market fund, some of it on short-term T-bills or whatever, but who holds this stuff? This is a lot of cash. $35.3 trillion, not cash, IOUs. So let's look at the red line. That's what's happening to our national debt. You guys notice it doesn't matter who's in the White House and when. This goes back to 2018. But if you go back, forever, this started in the 70s. And when we got rid of the gold standard, and then that's how we tried to grow the economy, because before we couldn't print money because everything was, the US dollar was tied up to the value of gold. So whatever we had gold in the vault, that's how much money could be in circulation. Well, we said, you know what? We need to grow economy leaps and bounds above this 2% GDP. We need to get rid of gold, have a floating dollar policy. And then here comes the printing machines. And then it worked for a while. Now, chickens, or what do you call it? They're coming to roost, or chickens are coming home, or whatever. I'm an immigrant, so my English is okay, but not as great as you all probably. So here it is. So when we did that, what are we doing? We're just pumping, putting into the economy, putting into money supply, putting into M2. And we grew our GDP to a total of $27 trillion. Last year's GDP is 27 trillion, while our debt is 35 trillion. So, cats is out of the bag. I mean, and we're going up $1 trillion every 100 days. So in probably less than 100 days now, if I come back in like 2 months, this should be 36 trillion. And another 100 days later, when I come back, I'll go to this. We're at 37 trillion now, with no relief in sight. As you guys can see, the angle of this thing is 45 degrees from the lower left to the upper right. It's going to keep doing this. Now, the other thing is going to happen is it's going to keep accelerating, actually, because the servicing of this debt that I talked about is also $1 trillion now, or over, every year. But I just wanted to make you guys understand who's holding all this stuff, like who's holding the gun to our head. So it may not be as bad as you guys think, because like China and Japan, they were the two largest debt holders of ours, with 1.7 trillion and 1.2 trillion. They've been actually cutting it. China is under $1 trillion now. They're selling all their U.S. securities in T-notes, T-bills, T-bonds. The definition, you guys can Google that. T-notes are shorter maturity. T-bonds are longer maturity. So who holds all these U.S. Treasury securities? Update on the investors in the ballooning U.S. national debt. As the Fed is unloading them, others are loading up. They must see something, right? Well, they see a return, right? I mean, if you were to buy a T-bill today, although with the lower rates, I think we're still about 4.5%, which is okay, I guess. But if the inflation, government says inflation is running 2%, interest rates are 4.5%, net return, right, of 2.5%. Hocus pocus, not true. Inflation in the country, actually, for the last God knows how long, has been running at 6 to 7%. Not 67, 6 to 7%. Even if you get to 4.5%, actually you're in the bag. I mean, you're in the negative on a nominal basis, okay? Because it's not 2%. Let's just be honest. So U.S. national debt has ballooned so fast to 35.2 trillion by 12 trillion since January of 2020. Okay, it's not politics. Okay, we know Biden took over in 2020, correct? Now, not that, and before then it was Trump. Well, you guys can see 2018 to 2020, it's not a pretty picture either. So this is not political. Whoever's in the White House loves to spend money. And the Washington, D.C. politicians, the state, the House and the Senate. So I'm like, we added 4 trillion to the deficit since Biden took over? Of course we did. We're sending billions, hundreds of billions to Ukraine. It's political. Let's not get into the politics. So 20, that's mind-boggling. I agree, especially in a growing economy. Yeah, because what's happening is that now every dollar we're borrowing to pump up the GDP, the ROI on that dollar is so low now. It used to be like 1 to 4. So if we borrowed $1, we could get a return of 4x. Now it's like 56 cents. So we're in a negative, like we're borrowing money to just grow the GDP 56 cents on each dollar we borrow. I wouldn't borrow money if my return was not at least 1-to-1, if not more, right? I mean, it doesn't make sense to me, but who am I? And every single one of the treasury securities that formed this colossal debt was bought and is held by some investor. Correct. And we're going to look at those entities that hold this treasury debt. Okay, let's look at it. Who holds the 27.05 trillion in marketable securities? Okay. The Securities Industry and Financial Markets Association just released its quarterly fixed income report in Q2, which spells out, among other things, who held these 27 trillion in marketable treasury securities at the end of Q2. Foreign holders at 33.5% of marketable securities. You guys can Google this. There is actually a pie chart on Google that includes every single country around the globe, from China, Japan, Russia, UK, and France, and everybody. And you guys will see the pie chart. 33.5% of marketable securities is held by foreign holders. That could be hedge funds. That could be anything. It doesn't have to be sovereign investment funds or governments. And 66% is held by U.S. entities that hold the remaining 66.5%. So 66.5 plus 33.5 is 100. So here we go. So that means foreigners own 33.5%, 66.5% is owned by the U.S. entities, right? Who are these U.S. entities? You guys are going to say, well, part of it is the Federal Reserve, because that's how they create money coming in and out of the economy, and like money supply, M2. So the 66.5% includes pension plans. The 66.5% may include if you're a teacher, the teacher's pension plans. It includes hedge funds. It includes companies. I mean, if you look at companies like Apple and Google and Meta, they hold billions, hundreds of billions. Or Warren Buffett, 270 billion in T-bills he owns, right? In short term, collecting 4%. So I think he owns more T-bills than the Fed. So it's the U.S., right? It's the U.S. entities such as pension plans, government entities, individuals, right? Because you can actually do this yourself. You can go to the treasury.gov, but you have to have a minimum of $25,000 to start. Or you can open a brokerage account like at Schwab and go buy T-bills, just like everybody else is doing. So there you go. 33.5% is held by foreigners, and 66.5% is held by the U.S. And these are from short-term T-bills. T-bills go weekly, monthly, right? And then you get into the T-notes, which is up to 2 years. Those are T-notes, meaning treasury notes. And then everything above 2 years, up to 10 years, is called T-notes. But then, and when you hear T-bonds, then bonds are much longer maturity. So when you do buy one of these at a T-bill at 4.5%, in 30 days, that's going to mature, and you're going to give you your money back, including interest, that 4.5%, and then you're going to go do it again. You're going to buy them again. It doesn't cost anything to do this. You just have to have enough money to do it, and that's where the money is at. So now you guys know who holds the bag. Well, no. Bag holding is a bad thing. It's not a bag. It's just holding bonds, and that's why you got to watch the macro, because interest rates fluctuate on these things as well. Because when these mature, the Treasury, issues new debt every single day in billions of dollars, because whatever they issued maybe a month ago or 2 years ago is expiring today or maturing today. So they have to issue new ones to replace. And when they had the zero interest rate policy, everything was fine, right? The interest rate expense on the servicing of the debt was very minimal. But when they raised the rates from 0 to 5, right? The servicing of this debt, 35 trillion, is out of control now. It's over 1.2 trillion just the interest that we pay on these IOUs. So you guys have to think of the bigger picture as well.